Alright, in this session we're going to be talking about the basic two methods we use to depict price behavior in visual form. And these two methods are candlestick charts and market profile charts. Now, if you're already a bit experienced and you understand candlestick charts and market profile charts well, you can go ahead and skip this session and move on to the next one. If, however, there's one of these that you do not understand, this is very crucial to get the basics right, because these are going to be the foundations for which we use to move forward. Alright, so now we'll start with the candlestick chart just to explain the basics of it. Now, what is a candlestick chart and how is it used to depict prices? So we'll start with one candle. Okay, each candle is basically a representation of a certain time period. This chart is a 5-minute chart. That means each of these candles you see on this chart represents 5 minutes of market action. Okay? Now, if you'll notice, this candle, each candle has what's called a body, something that's filled in, and then these thin lines that are not filled in. Okay? So this filled in part is the body of the candle, and these thin lines are what are called the shadows of the candle. Okay? And here's what they mean. The bottom of the body is where the market opened in this 5-minute period. So this is the open. Alright? The top of the solid body is the close of this 5-minute period. So at the end of the 5 minutes, this is where the price was at the end of 5 minutes. This is where it was when this 5 minutes opened, and this is where it happened to be when these 5 minutes closed. And now these shadows, these wicks of the candle, right, are what represents the other price action that led to the high and low. So prices opened here, they made some movements in between, they got as low as here, right? And they ended up getting as high as here. So this is the high of the candle, this is the low, this is the open, and this is the close. Now, that's in case of an up bar, which is green. You see that this bar is green, which means that the open was below the close. It closed higher, so it's an up bar, so it's green. In case of a down bar, which are the red bars, it's the exact opposite. The open is going to be the top one, and the close is going to be the bottom one. When something opens at a certain price and closes below that price, that's down movement, it's a down bar, and so it's red. And so when you look at these candles, you just have to realize when it's green, it's an up bar, the open is the bottom one, the close is the top one. On a down bar, the open is the top one, the close is the bottom one. And then they all have these wicks or shadows in between them. Those stay the same whether it's a down bar or an up bar. And as you'll see, every single candle is different. You know, this candle, the open, it opened here, you know, went a bit lower, went all the way up here, came back down and happened to close these 5 minutes right near where it opened. Some candles will close very near where they open, like these ones. You know, these were barely moving. This happened to be in a time when there was no market movement. So, you know, this market opens and closes at the exact same place, so it doesn't even have a body, if you'll notice. There's just one sideways line. Okay? So it opens and closes here and barely moves up or down. And this just shows you each 5-minute period what the market did. Now, when you take these candles as a whole, they show you what's called a trend or a lack of trend in prices. This is a trend. The market opens here, closes, has a little more action, but the candles in general are moving upwards, as you'll see. Okay? Now, what you have to understand in a price chart is that the prices are on the vertical column here, and the time is on the horizontal right here. So this is upward movement in time. Prices are moving higher over time. Alright? And now, sometimes prices don't move higher. Sometimes they just remain flat, like here. Right? And this is what we call a trading range, or a balance area. And this is what we call a trending movement. Alright? And this just allows you to easily see it in visual form. If you didn't have these simple ways of depicting them, it'd be very hard to read the market. You know, here you can look at instantly at any candle, know where it opened, where it closed, how high it went, and how low it went, that quickly. All right, and with time, you just get to know these faster. And this is basically how a candle chart is put together. And the reason why it's called a candlestick chart is because these things look like candles, if you'll notice. Candles have wicks at the bottom and at the top. So this is called a candle. And this is all put together to form a chart of market prices. Okay, now let's talk about another dimension of charts, and that's called market profile charts. Right? So the candlestick charts that we talked about before show how price moves over time. These market profile charts show a similar type of thing but from a different angle. They give you a different type of view of the market. Now at first glance these might look weird. You see just a bunch of letters all scrunched up. But they actually have meaning, and they can be very powerful when looked at with bar charts, with candle charts, to give you a different view or perspective of the market. Okay? Now here's how these work. Let's just split this up and then you'll see. Okay, each of these letters is a time period. Alright, so the letter A is the time period that represents the first 30 minutes of the market open. The letter B is the next 30 minutes. So for instance, let's assume we're talking about the New York Stock Exchange, which opens at 9:30 a.m. Eastern each day. So this would be the open at 9:30. If you see there's this little letter O in between, this means this is where it opened, right? Then price got as low as here and as high as here. So the edge of it is the high, this is the low, this is the open, and A represents the first 30 minutes. B is the next 30 minutes. So it opened here, here's the little O, and it got as low as here and as high as here. Then you go to C, which is the next 30 minutes, and so on till the end of the day. Okay? Now, why do we use these letters? What is their significance, and what are they trying to do? Alright? Now, the letters in and of themselves are not significant. They're just to help you visualize the different time periods. Okay? What's important to understand here is how these things are moving horizontally. Okay? Just like the bar chart or the candlestick chart, prices are on the vertical column and time is on the horizontal. And what makes these market profile charts a bit unique is that, now I've separated them just to show you the different letters, but in reality you usually see them like this. They're scrunched up. Okay? And when they're scrunched up, you see that they look different. Alright? Now the reason they look scrunched up and different is simply because the charting platform, all it does is when these are being depicted side by side, once you make it into a profile, the charting platform simply gets rid of all this white space to the left of it. So once you get rid of all this white space, all these things move to the left and you get the profile chart. Now the reason we do this is because the point of the profile chart, what it's trying to show you, is different than what a typical candlestick chart is trying to show you. The candlestick chart is trying to show you movement, price movement over time, right? Whereas what this type of chart is trying to show you is time at price. And these are two different concepts, okay? And what this concept means is how much time is the market spending at each price point. So let's take an example. At 14:59 during this market day, okay? And by the way, each of these are market days unto themselves. We separate each profile. This was a market day, this is a market day, and this is a market day. Okay? And so at 14:59 on this day, how much time did the market spend there? Well, we see, if we go from 14:59 here, we see that it was only there during period A, right? So the market did not spend that much time there. Whereas contrast that to 1456.5. The market spent how many time periods there? A, B, C, D, E, F, G, H. 8 different time periods. Okay? So the time spent at this price depicted through the market profile is obviously a lot more than the time spent at 14:59. Alright? And this is the power of the market profile. If you were just looking at a candlestick chart, you wouldn't be able to quickly tell at any specific price how much time the market spent there. But because of the profile, because it scrunches up this data like this, because it takes what normally would be price over time and scrunches it up, now you can see time at each specific price. Okay. Now you may be wondering what this is, these shadows right here. Well, this is volume. And as you see, this volume profile resembles this time-based profile. And that's simply why, because the more time that a market spends at any specific price, obviously the more trading is going to happen at that price, which means the more volume transactions is going to take place. So we see at 1459 there is very little volume transacted here because the market spent very little time there. Whereas at 1456.5 there was a lot of volume transacted here because the market spent a lot of time here. And if you take a look back at the session in which we talked about what is the purpose of the market, the purpose of the market we found was to facilitate trade, right? And so the market profile basically shows you at which price points did trade facilitation occur. So it's showing you at which price point was there value. Did buyers and sellers agree that a certain price is value, is a price where we agree on what value is, right? If you look at 1459, buyers and sellers did not agree that this price was value. And so price spent very little time here. Buyers and sellers did not agree that this is a correct value for the market at this point in time. Whereas for the majority of the day, these prices found a lot of trading, which means that buyers and sellers agreed, this is the correct value for that particular time in the day, based on the underlying fundamentals of whatever was happening that day in the market. All right, and if you look down here, buyers and sellers again did not agree that this was value because not much trade and not much time was spent there. It came down here and it was quickly rejected. This whole area was rejected as an area where trade facilitation or two-way trade can take place. Okay? And this is what is the usefulness of the market profile. It gives you a different dimension of looking at the market, right? And that dimension is time at price. How much time did the market spend at a particular price? And this is what's called horizontal development. You'll see that this chart is all about the horizontal. Which places did we have more horizontal development, more periods trading there, right? And this is why you get this kind of bell-shaped curve, right? It shows you the places where trade was not taking place and the majority of trade where it was taking place. Whereas if we look at a bar chart or a candlestick chart, right, that doesn't quickly show you that. What this depicts, what this is good at showing, is how our price is moving, in which direction over time. You can't readily see, for instance, at 168.5 how many time periods traded through that. Now you can visualize it. You could look at 168 and see that a lot of times these passed right through it, so you could have a good idea of that. But the point is that the market profile chart shows you that very quickly. You can instantly see where value was and where certain prices were rejected very quickly. Whereas this is good for showing you what was the trend of prices. And we'll find that both of these are very useful. Both of these prices show you a different angle from which to look at the market, to decipher their patterns, and to be able to understand what they're doing and how they're behaving much better. And then finally, for those of you who are wondering where to get the market profile charts, these days most charting platforms have market profile within it. Now some you have to buy at an extra subscription per month to get the market profile charts, but most will have it within it. You just have to go to the type of chart you're choosing, choose market profile, and you'll have your market profile charts.